Hey guys, it's a market update. There are two forces pulling Bitcoin and the crypto industry right now, East versus West. At least America seems to be cracking down a lot on crypto and Bitcoin. Really, China is opening up, and especially Hong Kong as well, which is actually incredibly good news. As for right now, there are two other forces pulling as well, which is China's easing economy and then the US, which is going through kind of an inflationary wave right now, which is pushing up bond yields, hence kind of downward pressure on Bitcoin. So let's look at all of that data right here. As of right now, trading on Bybit. If you are a trader, make sure to check the link in the description. You can get a deposit bonus up to $4,000 on Bybit, so check the details via that link. Just make a deposit, get the deposit bonus for trading. We are rejecting off of this 25 level, which seems to me, we really tested it a few times, probably 3-4 times, really testing the 25 level, seem to be getting rejected right now. I don't think this is a full rejection. If you see the price action previously during this kind of bull run, right, from the bottom, you're seeing a lot of rejection around this price level as well. And we actually rejected down to the support, but then just broke through everything, and now we're at this 25 level. If we zoom out, this 25 level is really, really important because we're essentially at the very, very top of this trading range that we've been in for a really long time, since around June 22. So you can see we're right at this level right here, and I would expect a lot of resistance at this price level because we are literally breaking through this, going into a completely different type of price. And so for right here, I would expect a lot more resistance than just a few days. Having said that, we are still in what would be considered an uptrend for right now. So you have the low print here, you have the next low, which is higher. And then for right now, we could even be going down to this kind of like 22.5 level and still be printing a higher low and still be in a kind of bullish uptrend. For right now though, probably not, because what we're seeing is an inflationary impulse go through the world, especially in the States as China have opened up. And so that muddies the waters, and we've seen bond yields increasing, which isn't great for BTC. So this is probably the last gasp where we have this inflationary impulse, bond yields kind of freak out again, and then people realize that that was just short term because of China, and then higher yields for longer just means an even worse recession. So there's definitely some things to worry about on the horizon, but for right now, Bitcoin is being supported by what's happening in China as well. As for the long term, Bitcoin is maturing, and its CAGR, or its compound annual growth rate, is actually coming down over time, which is obviously completely natural for any investment. And so as we can see here, each wave, right, each halving cycle and each bull and bear market really brings us down to the next bull market having a lower return than the previous one. And we can see that from here. So this is a 4-year CAGR. So it takes the 4-year annual growth and then obviously plots it as a percentage. And as we can see from the, the early bull markets, the CAGR was crazy, like, 800%. And then we have the next bull market and bear cycle, and that CAGR comes down to around 100 to 200%. And then during this bear market, you can see the CAGR coming down to, let's say anywhere from 35 to 60%. And so you can see that with each cycle that occurs, the annual growth rate, of course, as it matures, comes down. But I can't find any other investment on the planet that still has an annual growth rate of, let's say, 50+%, considering it's so large, one of the biggest assets in the world. It's in kind of around the top 10 and is so liquid. What other very large liquid investment is still giving this annual growth rate? I can't find one. And so that's why I think, considering how de-risked Bitcoin is generally, with governments and around the world saying, yeah, we're bringing this on, we're bringing trading on, considering it's so de-risked, this is still an amazing annual growth rate that we're seeing from BTC. I can't find many other assets, maybe ETH, that actually give us this. Using that annual growth rate as a projection, we can look forward to the price of Bitcoin as well. Now, I don't know whether Bitcoin is still going to have a 50% CAGR or 30% CAGR. I've just taken it from this lower bound. So this is a base case scenario, which is essentially the network growth at this point, and 30% CAGR for the first 3 years, and then going down to 20% after that. This would be a base case scenario just on network growth that's happening right now, and a good area to get in for most long-term investors. As we can see, anywhere where the price is above this mid bound to the upper bound is somewhere where you really don't want to be getting too involved in terms of, if you're a long-term investor, maybe you can, but these areas are where it's usually overbought and where it's obviously the worst time to buy. So try and avoid these areas. We aren't near that yet. So even at this price level around 25,000, we are still in the accumulation phase before the halving, as you can see this blue mark. So for me, this whole entire range is just dollar cost averaging, because that is when you dollar cost average. Moving into the halving, anywhere up in this upper bound, if the price gets here short term, it's probably not the best time to be buying. Everyone can make decisions where maybe they want to buy here because they're going to hold it for 25 years, but these are not really the times to buy and go too heavy. These certainly are. We're in that zone right now, so I don't really care if it's 25, 22 or 30, it's within that zone. The bear case short term is the interest rates are popping off, so they're getting much higher, and we seem to be potentially double topping here, as you can see. So we had this breakout around, 4.7 on the 2-year, and then we have another breakout here, and that's because inflation is coming higher again. So the PPIs have come in very hot. All of the readings have come in very hot, right? And now used car prices are up. We have an inflationary wave because China opened up, sent a demand impulse through most economies, and that's pushed inflation a bit higher. So the market is now worried. Now, why are we not lower than where we actually hit this last time? Markets look forward and they realize that this is probably just a short-term scare. And in any case, the percentage difference between 4.1% and this now at 4.6% is 13%. The dump that we saw in Bitcoin happened because of this move here that happened, which was a few 100% difference. So now we're just getting into the late stages of this cycle where you get these inflationary impulses and everyone gets scared. But the longer it's up here, the worse the recession is. Now that's not great news overall, but the worse the recession is, the more the governments have to do in terms of monetary debasement again, and Bitcoin is insurance against that. So this is short term, not great for the price. I think you have to look at the big picture here. Also, the other side of this thing is that China, as you can see, injecting hundreds of billions of dollars over this short-term period in liquidity into their markets. They are stimulating their economy. And we know what happens when the market gets stimulated from governments. Currency is debased, but some of that money finds its way into Bitcoin. Bitcoin is showing that now, up 50% this year. Specifically to Bitcoin and crypto as well, Hong Kong opening up to crypto now cannot be understated in how important this news is. This is going to have the sign and seal of approval from Beijing, and so very important to just have all of that capital flowing into Hong Kong for crypto. And so having a regulatory environment that's conducive to that is very good for Hong Kong, but it's also competition. The Americans won't want to be left behind, and so they have to get their act in gear because they're just all over the gaff, and it's embarrassing at this point for America. But you can see here, the key message is that Hong Kong is opening up in a big way. Besides being the financial hub of Asia, Hong Kong wants to be the fintech and crypto hub of Asia. It's launched a 3.8 billion fund. Specific to crypto, the government has already put a framework in place and is prepared to issue licenses to crypto intermediaries. As you can see here, it's great news for Hong Kong. They are trying to attract entrepreneurs to come to Hong Kong to open up crypto businesses, and that's great news for the industry in general. I'm a Bitcoin and crypto bull though, so take everything I say with a pinch of salt, of course. If you are a trader though, get your deposit bonus on Bybit. Check the link in the description for that deposit bonus. I'm James with Money ZG. Cheers for watching, and I'll see you in the next one.